Hello and welcome to another edition of Smart Market Insights here on Kalkine TV. I'm James, and in this episode I'll be doing a deep dive on the commodities space. The prices of commodities ranging from energy products to metals have shot up in the past month following Russia's invasion of Ukraine, raising supply shortage concerns. Though the momentum has partially stalled on hopes of reconciliation between both nations, many experts believe that the prices will remain volatile in the near term as market players assess demand-supply implications. Brent crude oil ended last week at $112.67 a barrel, while WTI crude closed at $109.33 a barrel last Friday, recording the biggest weekly drop since November 2021. Natural gas prices also dipped to near $4.73 per 1 million British thermal units, nearly 10% lower than three-month highs of $5.18 per 1 million British thermal units, which was reached on the 7th of March. Also, coal prices slid more than 40% last Friday after hitting record highs of $425 per tonne. The prices skyrocketed to record levels on fears of supply chain disruptions and low inventories. Last Friday, uranium prices soared more than 11% to record weekly gains of more than 17%. The prices reached near $60.4 on Friday amid mounting supply concerns and stronger global demand prospects. Russia signed a decree including a ban on raw material exports, raising alarms about US uranium imports. Among precious metals, both gold and silver recorded marginal declines in the last week, as investors brace for an upcoming rate hike from the Federal Reserve, which significantly pushed 10-year US Treasury yields. Industrial metals including copper, aluminium, platinum, tin, zinc and lead retreated during the last week after hitting multi-year highs. A significant battery metal, nickel, surged by a whopping 65% last Tuesday to hover just over $80,000 per tonne after hitting $101,365 per tonne in the previous session on the same day. The price has gained more than 74% in the past week. At the same time, lithium prices remained stable during the period. Both crude oil benchmarks recorded substantial drops last week after hitting 14-year highs. And the Russian oil embargoes underpin the significant rise in crude oil prices. The prices dropped significantly later in the week after Europe stepped back from its allies in banning Russian oil. Furthermore, some OPEC Plus members, coupled with Iran and Venezuela, also pledged to boost production, further easing supply concerns. Uranium futures extended their gains above $54 a pound last Friday to reach their highest level since September 2011. The energy sector in the US produces nearly 1/5 of its total energy through nuclear sources and imports around 16% of its uranium from Russia. After the US embargoed Russian oil, the Kremlin also banned its raw material exports, creating chaos in the nuclear energy market. At the same time, rising crude and oil gas prices also prompted utilities to search for cheaper alternatives. In effect, there is much ado in the commodities space, with almost all of the major impacts stemming from the Russian invasion of Ukraine, and at Kalkine will be sure to keep you abreast of all the latest developments. Alright, well that's all for now of this edition of Smart Market Insights. Make sure to keep it locked on Kalkine for the latest market updates and business news. I'm James, signing off for now.